Hello everyone and welcome to Fun with Fitzy. We are almost done chapter 9. This is in chapter 9.5 part 4. We're going to compare the two methods, the straight line and the declining balance method. For a straight line, assume the computers have an 8-year life with an ending value of $2,000. So here would be a depreciation table. So in year 1, the depreciation expense, because it's a straight line, it's going to be the same expense every year, and the net book value is just cost minus accumulated depreciation, so it's just going down, right? Remember our formula? Cost minus residual value divided by useful life. So we come up with our depreciation expense of $2,500 per year. So the straight line method produces depreciation figures that are the same each year, except for if you had to prorate the first year. The net book value, sometimes known as the undepreciated cost, gradually gets smaller until it reaches the estimated salvage value. Look at that. So there's our salvage value, which is right there. So that's one thing you need to know. Now let's compare it to the declining balance method, where our formula is net book value times rate, right? And I showed you in the last video that the depreciation expense gradually decreases. So in other words, the declining balance method produces depreciation figures that are larger in the early years and smaller in the later years. The estimated final value is ignored using this method. Okay? So let's talk about CRA again. Canada Revenue Agency is the agency where companies have to submit their income taxes to, as well as us. And it requires businesses to use the declining balance method when calculating depreciation for tax. We talked about this and we looked at the CRA tables that gave us the rates. And I also talked about the 50% rule, where when you have an asset that was purchased mid-year or any time during the year, we were prorating it in the last video. If you're submitting your depreciation for tax purposes, you have to use the 50% rule in the first year, regardless of when you bought it. Okay, no matter when you bought it. So this is called the 50% rule. You prorate it, but instead of dividing it by 12 months and multiplying it by the number of months you've had it, just use the 50% rule. So let's look at this. An automobile was purchased for $25,000 in year 1. That's our net book value, and our rate is 30%. So I can put that in every year. The rate is going to be the same. So 25,000 times 0.3 is 75. This pen is not the right color. But because this is our first year, we have to prorate it and times it by 50%. So in actual fact, our depreciation expense in the first year is $3,750 instead of the $7,500. So our accumulated depreciation is $3,750, and therefore our net book value is $21,250. Times it by our rate in the next year is going to be $63.75. Notice that it jumps up a little bit. Normally in declining balance method it goes down, but because we had used the 50% rule in the first year, it is normal for it to bump back up in the next year, our depreciation expense. So now our accumulated depreciation is going to be $37.50 plus the $63.75, $10,125. Our net book value, remember, is cost minus accumulated depreciation. Our cost is $25,000. And now our accumulated depreciation for this year is this. So 25,000 minus that is 14,875. And so on. We go on and on. Okay, I'm going to let you finish this table. So how does the 50% tax rule look? Just like we said. Okay, the first year is going to be smaller than the next year. And that's very normal. And then there you can see our declining balance method. Our depreciation expense declines. And that's why we call it the declining balance method. So by now you should be able to do a lot. We are finished the entire accounting cycle for a service company. So with respect to this video, you should be able to describe the difference between the straight line and declining balance method. So the two graphs, one would be straight line, the other one would be declining balance, and that's the depreciation expense. So there's your simple graphical representation. And you should be able to calculate the declining balance for a partial year using that 50% rule, the CRA. You should also be able to do it for using proration too. So that's a lot in this chapter. I hope this helped, and we'll see you soon.